All right, so it is Monday, December 9th, 2024, Income Navigator live trading session here. Goal today on Monday is, as I usually do on Mondays, if we do a live session, is there's just to look for trade ideas out there, see what's available, see what we can come up with some trade ideas. Uh, I did post some in the Discord over the weekend. Obviously, those are ideas. We wait and see what happens when the market opens, see what's going on. We got a little bit of selling pressure today in the ES. So let's just take a look at what's what. And we'll run through some trade ideas. We'll run through both investing and trading ideas. So hopefully you can see uh, the charts. All right, so let's take a quick look at ES. We'll start here, see if there's any opportunities and ideas to get going here on ES. Now, last time we talked, and I went through some trade ideas, ES was a hold for me. And let's take a look and see what happens if anything different has changed here. We are still in what I look at as a rising wedge. Here, rising wedge, not the worst thing in the world. The market continues to rise. However, if we do break the downside of this significantly, then we could start to see somewhat of a sell-off. So has things changed really as far as, let me get off the screen too, so you can see maybe the whole piece. But have things changed overall in the market? Not really. We're still here at recent all-time highs in the S&P, as even as last Friday, as soon as last Friday. Now we got a little bit of selling going off today. A good amount of that selling is really attributable to Nvidia pulling back a bit today, and you got a little bit of Meta pulling back and some Tesla pulling back. Even Netflix, I don't know how much they're in there, but Apple, Microsoft, Amazon, and Google are all up on the session. So just some mixed bag when it comes to the large cap stocks. But overall, still things are bullish. I mean, we're one day removed from a new all-time high. Things are bullish until they aren't. Here, I think we're getting tighter and tighter and tighter into this rising wedge. So that to me would make me, again, just a bit more cautious every single day. Now, the fact that we're pulling back and stuff in here isn't the worst thing. I think for our trades, gave us some good opportunities today. It's a Monday, so for me in the investing account, the Lazy Trader account, this is where we sell SPY leaps. So did that today for Igor. He's selling his SPY uh, naked puts as well, Monday, Wednesday, Friday. So it's a good day to do that. This is not a day for me to enter any types of ES 112 calendar trades or 112 trades. We did that last week. So I won't be looking at any new trades till next Monday on the ES. Now, we did take something off today, so we'll touch base on that. And I'll run through some of that stuff. I'll share not only the spreadsheet piece with you, but trades I'm looking at. But overall, here, things are bullish until they're not. Pullbacks aren't bad. We continue to see higher highs, higher lows. If we break this bottom trend line of this rising wedge, that will be my signal to get a little bit more cautious here. You've got 5,900 on the PSAR on the weekly and about 6,000 on the PSAR as well as the 21-day moving average. If those start to break and we break below here and we even head down to the 50, I'm not saying the world's ending. Those could still be higher highs, but I will be very cautious with what we do. So I don't want to add a lot of new ES trades. I'm not adding any of the 112W trades. Igor might add one on his side. He's a lot more mechanical on those. Funny to say that Igor would be more mechanical on something than I am, but he's doing those on more of a campaign basis. I'm doing them on a uh, more of a discretionary basis out there. And we closed one of my oldest 111 trades that we had. We just closed the naked puts today on that. So we're in pretty good shape, really starting to set up for the 112C campaign as we move forward. All right, so there's ES again, I would still rate it as a bullish but cautious, and I'm on hold. I'm still not really adding any new ES trades that aren't campaign style, which means I'll still keep doing the 112C trades, the calendarized trades. We'll keep those every 2 weeks, but I don't have anything this week. And then I'm also doing the 120-day 6 delta trades. Those are campaign trades. We just added a new one of those back on the 6th, though, was it last Friday? We added and we're back into the naked puts as one came off. So that's in good shape. All right, oil. We continue to be in this consolidation zone here, and we're really in this value area. We sold off a bit on Friday. We bounced again today. This continues to be a pretty good support level at 67. It keeps getting attacked, but it's repelling the advances here, trying to break through this line. So until that happens, we continue to stay, in my opinion, uh, bullish or keep making these things. No, not, I shouldn't say bullish, but we'll continue to just play sideways trends to slightly lower trends. So what do we have in oil? If I'm trading oil right now, we were trading 112s last week. That was the determination there. I don't think anything has changed for me on that. We've come down, we've hit this uh, support level and bounced off of it pretty well today. Uh, I don't see anything crazy out of the ordinary in the Middle East. Everything's crazy in the Middle East. But we've got two 112 trades on. We're up 60% in one, 22% in the other one. Both of those are underway. I would still be looking at potential 112 trades or even potential put credit spreads here as we bounce off of this support level. If we continue to hold this support level and we can move even slightly higher, we are in a pretty good squeeze on oil. We are oversold on the stochastic momentum. I think this gives us a chance to potentially look at some, more sideways movement. I would not also be opposed to a strangle in oil here. And I do have some opportunities to add some more trades, so a strangle in oil might be a good idea as well. So I think there's a lot of trade opportunities in oil. Uh, so I think that's something to consider. We've really been sticking between this 67 and 72 range. I think oil can hold this support level even down into the mid 60s here, this low of 64. I think we hold that. We still have oversupply, maybe a little waning demand, although if China starts their stimulus, maybe that pushes demand a bit. I don't believe anything coming out of China is going to help. I don't really believe anything China says or does either. So I really discount most of that. We're seeing a little bit of a bump today. I think it is what it is. I think it's just a bump and we move on. But I think this is a good setup for almost anything. 112s, put credit spreads, strangles, anything in oil right now, I think looks pretty good. So oil, good opportunity trade. ZN, I really don't cover a whole lot on ZN. It looks the same as ZB. It's had a pretty good move off of the lows here. I would think that bonds will chill a tad. Here is where we are on ZB. We used this nice recovery here to close out almost all of our, well, I shouldn't say almost all of our ZB naked puts for nice gains. So we're all out of everything except we added a new strangle here. That strangle's now up 39% in 12 days. I think this still sets up really, really well for another strangle. So I think in bonds, I think strangles here are good opportunities. I don't know that I would love a put credit spread at this level or naked puts quite as much on their own. I like the 112 setup potentially in ZB. I think a 112 might be a good opportunity. I don't see us just rallying way back up into the upper 120s. I don't see us falling down into the single 108, 107s anywhere. I think we just stay in a range here while we wait for the Fed which looks like the Fed's going to raise, or I'm sorry, cut by 25 basis points coming up. Uh, so I think again a good strangle opportunity here in ZB. So we'll take a look at that. We already have one running. I don't know if I want to put another one on right on top of it. Maybe we'll just stick with the oil. We do have good BP ready to go. I do like what we're seeing here in gold. This thing has been just consolidating for a couple weeks now in a pretty good consolidation pattern. If we, I didn't really draw it perfectly, but you've got a bit of a triangle pattern going here on this. Looks like maybe a breakout of that today. We're also breaking above uh, this trend line. I like it. I mean, I think gold looks good here. I'm bullish metals into next year. I believe the markets will. I think the markets will be overall bullish for the year. I'm expecting a decent pullback. I think that decent pullback will help the metals. I think if we continue to see a good, strong economy, if the world continues to uh, improve a bit, if China does improve, I think you see more of a demand for metals. But I think flight to safety trade in some of these metals, if the market does sell off indeed next year. But I think overall, you've had a really nice pullback on the weekly chart and a bounce off of that, and it looks like a break of this triangle. In here, I would like to get on, and I just did get on a put credit spread. So I just placed a trade just prior to this. I don't love doing that because I'd rather share it with you live, but I'll give you a sense of what I've done today, just so you can see, because I haven't had a chance to post any of this stuff yet. Uh, but here are the trades from today. I've already posted this one at the bottom. So this ES trade on our account, this ES trade was just closing the naked puts for about a 90% winner on a long-term 111 trade. I did close the 6A. I put an order in for a 50% winner today to take advantage of it. We've only been in this trade for a very short period of time. This trade is when did we put this trade on in 6A? This was put on the 22nd. So we're 2 weeks into a 90-day trade. Normally on a 112 trade, you would expect to hit 90% in 75, 90% winner on the naked puts in 75% of the time. So on a 90-day trade, which was basically a 77-day trade. So a 77-day trade, 75% of the time would be roughly 58 days or so in the trade. Well, we've only been in this trade 14 days, and we got 50%. So why wait another 30 days or so to get the other 40%? I think we just redeploy this capital, and we take the win and we move on. So that's 6A trade. And then here's the gold trade up here. I'll be posting this shortly as soon as we're done with this session. I opened a put credit spread on gold here, and we'll talk more about that trade. But I just wanted to show that to you so you have a sense of what we're doing. And when I looked at this gold trade, I put it on at 25.40, 25.35, which is right down where I have some support here from a previous pivot level on both the weekly and the daily. That is also right around the lower end of the Bollinger Band, and we're sitting right here just breaking above uh, the 21-day moving average. MACD looks bullish. RSI is ticking up today. Squeeze is in a squeeze and moving higher. Uh, so we could see a squeeze fired any second now on the daily chart. So I wanted to get just a 50-day put credit spread in on gold. All right, so that trade's already in the books, but on gold, things look fairly bullish. I think put credit spreads here on gold are a decent idea. Also, you could even look at this thing from a strangle lens as well. So you could look to strangle gold. I feel more comfortable with the put credit spread right now. I don't think gold's really going to rocket anywhere. I don't think it falls. So I do think a strangle is not a bad opportunity on gold. Last week, I also indicated a strangle would be a good play on gold. All right, so we're looking at copper, pretty much the same type of a thing uh, going on here. We can take a look at this uh, trend line heading down, heading lower on this trend line. And maybe we can even pull it back up to here a bit more. It's not exactly perfect. Okay, but I do think uh, you've got a downtrend line that's going to provide support. You're moving up to the Bollinger top. The Bollinger Bands have been tightening. Okay, so we might see them start to widen, but not yet. They're still pinching in. I think copper's still a good opportunity here. If I was looking at copper, I think a strangle is not bad. We've already closed out some stuff for a winner. On copper, we're not in any trades right now. I am also bullish here. I think a put credit spread would be the number one thing I would take a look at here on copper. You're in a squeeze. RSI is rising, a MACD is rising, stochastic momentum's rising. You're oversold and curling up on the weekly here on the stochastic momentum. RSI is starting to rise. MACD is reversing. You're in a squeeze. I think copper is a good put credit spread trade. You could possibly even do a naked put on this. All right, so there's copper. Silver. What are we looking at? Silver, somewhat of you know, the same type of thing. We have uh, a bit of a downtrend. There's not many touches on it, so it's not the best, but you got silver also having a pretty good day today, breaking out to the upside. It's pretty bullish looking. We did a strangle here, which I still think the strangle will be okay. We're breaking above the Bollinger Band, which is starting to open, heading to the 3 ATR. I still think we hang inside of our strangle on silver. If I was to do something today and I'm not already in that strangle on silver, it's a put credit spread. So I think put credit spread, naked puts on silver, another opportunity for a trade. So I'm going to go put credit spread on copper, gold, and silver here. I think strangles on gold. I think strangles potentially on copper and silver. It's still a strangle opportunity, but I'd be more cautious now of putting that on. But I think we'll still be in good shape. Our strangle is the 40, which is not even on this chart, so you can't even see the 40 level on this chart, which is way above the weekly Bollinger Band, way above the 3 ATR. I mean, I had to shrink it just to get in there on it, and we'd have to really move up well, well, well over the 3 ATR levels and the Bollinger Band. Doesn't mean it can't happen, but I think the China thing is going to be overblown and overdone. I think we just continue to move sideways to higher on silver. Uh, Silver IVR is about 33 on it. All right, 6A, the Aussie dollar. Looking at this, continues to trade in this range. We're near the bottom of the Bollinger Band here on both the daily and the weekly. This downtrend has been pretty severe. Uh, Downtrend that we've been in. In fact, a bit of pretty much a channel opportunity here. And if I can draw this, it's a pretty solid downtrend channel. We've been to the bottom, we've been to the top, we've been to the bottom, we've been back to the top. Let's see where this goes. But the Aussie dollar is, obviously strongly tied to the US dollar, which is still strong, but you are well oversold on stochastic momentum on the weekly. You have squeeze firing to the downside on the weekly, but I think you get a little more sideways action. So I think you're not oversold on RSI yet, but you're down, at some lows, and you're pretty low on the MACD as well. I think 6A, we just closed out at 112 on 6A. I'm going to hold off here on anything. It's not a terrible strangle opportunity. I'd like to see a little bit more of a recovery towards the 21-day moving average. So if we get any kind of a breakthrough of this downtrend channel, but right now on the Aussie dollar, this is a hold for me. I am not adding any trades in here. Don't really see great trade opportunities. The Nasdaq, similar to the S&P, new all-time highs. In fact, what was the highs? 21,669. So today, even today, a new all-time high earlier in the day, earlier in the session on the Nasdaq, and then pulling back a tad. Not, not to the extent maybe of S&P. Actually, maybe a little bit more here, but I think the stocks are in good shape for this. I think we still rally into year end. I don't see a real great trade setup, in my opinion. Uh, so without a decent trade setup here at these highs, just like ES on Nasdaq, I'm going to hold. So ES and Nasdaq holds. Let's take a look at one more, and that would be RTY. So on the Russell. Nice pullback on the weekly. We're kind of just flatlining on RSI. The stochastic momentum's a little overdone. MACD's been rolling over, so I think this pullback has been good. I think we find some support. Now, it looked like on Friday maybe we were going to touch off this 21 and move higher. Today, we're barely down. This is almost up on the session. It's just flat. I think if this 21-day moving average holds, or if we can even come down to the 50 and move higher, either way, it's a higher high and then another higher low if we bounce off either one of those. I think you're setting up for an RTY trade. I just don't think we're there yet. So I'm on a hold on the indexes, all three of them. I'd like to see this. If it gets a bounce and gets moving higher, I like it. Bollinger Bands have pinched in, and maybe they'll start to widen out a bit here on the daily. So I think we could still get another pretty good rally on RTY into the end of the year. So I'm still bullish into the inauguration on everything. But I don't love the charts. I love any kind of a pullback here. I think is a good opportunity. All right. So there's where we are on futures. Handful of trades, mostly metals. I think metals are put credit spreads, maybe a strangle on gold. I think bonds are strangles, 112s, and I think oil is pretty much just pick your poison. Do you want a 112, a put credit spread, or even a strangle, or all of the above? I think oil is very tradable right in this level. So plenty of opportunities for trades. Let's take a look at some of the lazy trader trades, or the trades that I would do in the investing account. So let's just run through those briefly with you. I posted a few yesterday. Some may be invalidated here today, but one of the first ones I want to take a look at is Tesla. So Tesla, just unbelievable how this thing just keeps cranking up to new highs today. People are now coming out with revised estimates upward. They don't want to be left in the dark. A real quick question in chat. Does the oil IVR of 5 concern me? Not necessarily. I don't think for like a 112 or even a put credit spread, you would like to see a little bit more potentially for a strangle on this in case oil does increase its volatility. So strangle might be the least enticing of the options with a low IVR. But on the other hand, having a lower volatility means that the price movement won't be so dramatic. So I think that could help our trades, especially I think if we put in like a put credit spread or maybe a 112 trade uh, and keeps the volatility from this thing cranking either against us or potentially for us. So yeah, I think the only thing you got to take a look at would be, strangles down at this IVR. on oil, not necessarily the best opportunity there. All right, Tesla. I would love to be in Tesla. I think this thing goes significantly higher. I think we're definitely hitting. Well, obviously, 400 was a magnet. We got there. Will we get a little bit of a sell-off? This is overbought. I'd like to see it come down. I did look into a poor man's covered call, and again, do you want to put on a poor man's covered call at the top of the Bollinger Band or the 3R ATR level? It's not the worst thing for me because I don't mind buying the calls well below where we are. So if I'm buying calls well below where we are, yes, you're paying that premium, but I think if you pay the premium off with your covered calls, it gives you a chance to get into Tesla here. I'd love to see a pullback on it. I'll wait a little bit more, but it's at least a price opportunity. For me, a poor man's covered call is less of a bullish play as it is an income play for me. Yes, you can get some price appreciation on the long calls, which is certainly nice to get. But I love the fact that I'm selling the covered calls against a lower cost or lower buying power option versus owning the stock in here. And even paying a bit of a premium, okay, I can pay that premium off with the covered calls over the 5, 6, 7, 8 months or a year, however you like to do the poor man's covered call. Right now, I'm sticking to maybe 180 days on anything because I really don't trust the market. So I'm sticking a little shorter term. I would love to see the pullback happening. I really would like to be in Tesla. There's not really a great way to do that right now. Uh, you could sell, naked calls, but you've got earnings coming up, which could be interesting. I think maybe even selling naked, I don't know what I said, but selling naked calls down around a level you would be happy to own Tesla at. I'd like to own Tesla uh, essentially in the 300-ish range. That might be dreaming, but I'd love to get in around there. You could sell the 300 naked puts out about 45 days, and that's not a terrible trade. You're taking in almost $500 on this trade, and it's about a 7% return on margin. So Tesla, to me, there's some opportunities here. So let's take a quick look, and let me switch gears. Make sure I got the right account to trade. And let's take a look at some possible trades on Tesla. And again, you're at the upper end of the Bollinger Band and the 3 ATR line. Not the greatest time to be getting into a lot of bullish trades on it, but I wouldn't want to get in front of this train. I still think it goes higher. I think we see 800 to 1,000 in the next 18 months or so on Tesla. So I think this has a lot more upside to go. And trades that we could potentially look at here would be if I go out about 45 days and sell the 300 naked put, I would be okay taking assignment on this thing around 300. Uh, this is a $455 premium on $5,200 in buying power. So it's a pretty good ROI. 455 on 5211 pays almost 9% on this trade. So you could go 9% on the 300s and do pretty well. I also think you could be looking at put credit spreads here. I still think it goes higher. I think it can go higher into year end. The pullback today is certainly helpful a bit. I mean, it did hit new highs and then pulled back. It hit the 400 level. We'll give it a day or two, but I might be looking at something along the lines of maybe a put credit spread, something like the 320, 315, or the 315, 310. Any of these I think are helpful here. So I'm not sure who just drew on my I think, but you should not be able to do that. Um, so, all right. So we'll keep rocking and rolling on this, but overall, I like where we are um, on this. So, a put credit spread to 315, 310, you'd make 82 bucks on 349. That is a really nice return. You could go up a little higher if you wanted to, go a little wider. Even like the 320, 310, something in that, it's going to pay 182 bucks on 698. Again, this is a PM account. Uh, yeah, that's a 26% return. If we stay over 320, I think we will stay over 320 on Tesla. You can get even more conservative, like the 310, 300. You're taking in 153 on 690, which is still pretty good. Um, that's about 22% return. If you took half of that, you'd still get 11% maybe in 21 days or so on this thing. If Tesla continues to be up here, and then would you take assignment even at 310, which is not, again, a bad level to take a look at. I even was looking at selling the naked at 300, but I could sell both. So could sell a credit spread. We're still making roughly 16% on this one. And if it comes down to 300, I possibly would consider taking assignment on that. If I took assignment on one, it's going to use up about $13,000 in buying power for me to own 100 shares of Tesla. If that would happen, we could then go right, covered calls. Even at like the 30 delta, you're getting 12 bucks for these covered calls right now. I know IVR is up a tad simply because earnings are a month away, but that's a pretty nice return there. It's almost a 10% return if you sold a covered call on that. If you wanted to get, and that's a 400, and we would take assignment at 310. You could even write an at the money on this thing for almost 30 bucks on that. So if you wanted to get back out. So I think it's a good opportunity on Tesla. So there's one trade is Tesla. I think there's a couple opportunities in here. Poor man's covered call. If the pullback continues a bit more here, I would like to get in on this particular trade and um, see what we can do. All right. So there's one trade, which is Tesla. Let's take a quick look at some other things out here. We will take a look at MicroStrategy since it's one I continue to trade. I like the fact that we got a little bit of a pullback here today. The nice thing on MicroStrategy is we are down today, but IVR is still at 46. So your volatility is still up decently. I closed a trade. Every one of my trades, even though we have naked puts and the stock is down today, every one of them is up. In fact, they're up big. We're up 200. I'm up 1,200. I'm up 200. I'm up almost, $1,400 on the naked parts of our trades today, and MicroStrategy is down. Uh, Again, I think the value of MicroStrategy is somewhere around the 200-ish level, the 180, 190, 200 level. That's where I continue to play. I do have a poor man's covered call here. I do own the 200 call. That's up fractionally. And then then I sold the 390 covered call, and now we're underneath that. That trades up $1,300 just on that today on that call. I'm up almost $700 on the covered call. It's up 30%. So we've got 4 days to go till Friday. MicroStrategy continues to be just a spec trade opportunity. It's not a long-term investment. I am bullish on Bitcoin, but this thing is out of control. But I still think it sets up for trade opportunities to take advantage of that. All right, let's take a look at Bitcoin here. IBIT, which is the Bitcoin ETF. This is one way to play Bitcoin. I like this ETF. It's pretty liquid. You can get in and out of this trade. I looked at doing, again, a poor man's covered call here. I looked at selling now I posted this in the Discord so you guys can all go take a look at it. I looked at selling the 45, and on this pullback today, this is nice. Okay, so I like it. So you could sell the 45, which is right around this gap fill area here. So will we come down and fill this gap in here? Possibly, but I think 44, good support level on this thing. So I think somewhere around that 44, 45 is not a bad spot to be if Bitcoin pulls back. Maybe the exuberance starts to chill out a bit. I just see it consolidating in here. So I think you have an opportunity. And I was going to sell the 45. In fact, let's put the new trade on and let's go back to the trading account. And again, hopefully this is helpful. You guys are getting some trade ideas from this. Uh, I'm going out on this one. Let's see. We can do probably the May calls about 158. Okay. If we sold the 45, or I'm sorry, bought the 45, that thing's going to cost me $1,610 in margin. So this is the IBIT. Okay. If I sold the 45 for May, and it's gonna cost me $16. So $1,600 is the cost of the trade using and buying power is exactly the same. So we're not getting any relief on the BP because it's Bitcoin here. But all right, so we'll pay $1,600 to get into this trade. I would probably be okay with assignment at 45 if that happened, but that's quite a ways below where we are. We'd have to drop almost 20% in Bitcoin. Doesn't mean it can't happen, but I don't know if we get a 20% in Bitcoin drop in the immediate future. But then I could take this and go out and write 30-day covered calls, the January 10th, the covered call. We could probably do something in the 30 delta range, maybe sell like the 63 for a buck 80. So we take in $180 on a $1,600 trade. That's 11% in 30 days. If the market moves up, we're going to see price appreciation on the longs. Okay. And if we did the longs, these are roughly a 75 delta, so you could go a little lower to get a little bit more one for one. But if we moved up towards this 63, that would be $8 up from where we are now at a 75 delta, which means those lower calls should increase by about $6. So we'll make $600 on the long calls, and we're selling these shorts for about 180, $190. So we could make maybe $800 on that trade on 1,600. Actually, we're at 1,400 when you take into account doing a buy right at the same time. So not a bad trade. If this thing runs up to 60 level or something like that, I think we have a pretty good winning trade on our hands where we could make almost 500, $600 on 1,400. That might be a 30% return. So I think this is a good trade opportunity. In fact, I like it so much. Let's just do it here now. So I talked myself into it. And we're just going to let's do two contracts. We'll keep this thing small for now. Two contracts. We're going to buy the 45s. Okay, let's see if we can get in for 15.95. Okay, we'll see if that works. We'll probably have to massage that a bit. Okay, let's take a look at this one. Maybe we can get it 1,600. There we go. All right, so we'll get in for $1,600 on this, and then we've got two contracts. We own the 45s. I like the fact that we got in on a down day. IV is 56. So let's sell a 30-day call. Let's actually go 25 because then maybe we can get a second trade in before the inauguration. Let's see what we can take in here. Somewhere around the 30 delta, maybe $160 for two, so which would be $320. Let's see if we can sell that. There we go. All right, so that trade is placed. So we've got a poor man's covered call on Bitcoin going here. Didn't cost a ton for us, and We took in $320 on the call, and we spent $3,200 roughly on the long. So it's about a 10% return if we stay under 62. If we go up, then we'll look to either roll or close the entire trade out on Bitcoin. So I like the Bitcoin idea in here. Let's keep going. All right, so let's go back to the charts. So IBIT, I do like it. Let's keep rolling on these. Another trade that I did, I won't keep probably belaboring it or probably won't do it much again, but on MicroStrategy, if we have big up days, I will continue to sell naked calls at 500. Uh, MicroStrategy has a expiration every single Friday. So you can do this for 1, 2, 3, or 4 or 5 day trades. But I've been selling the 500 calls and just making like $1,000 a week or so on that. I think it's an interesting idea. I know we had a volatility spike and it could do it, but I just don't see that volatility spike heading there again. Even if Bitcoin goes up, I think it gets closer to what Bitcoin is. All right, NVIDIA. Opportunity potentially. We are in this value range on Nvidia. It's been on a nice trend higher, higher highs, higher lows, higher highs. Okay, now you've been in this value area now for what looks like about 3 months almost. Uh, Really dating back to uh, middle of October, so almost 3 months. November and now 2 months, I should say. So it's two full months in this value area. Now we're at the bottom end of this. Some news out from China looking at antitrust against Nvidia. Uh, I don't put a whole ton of stock in that thing, but I think it's a good opportunity on this pullback. I really think Nvidia is valued around 140, in my opinion, for this company. And I think anytime you can get in at a little bit of a lower price is a good opportunity. Now, we do have a couple trades on already. So I have a Jade Lizard in here. That thing is up 71% now in 14 days. So I'll probably just leave that going for a little bit, but we'll look to take it off soon. And then I have the 110 naked puts. Those are up 26% on Nvidia, but I think you're getting another opportunity here on this pullback. And I think you definitely have, some support levels in here. You have a pivot level support at 131 from this. Yeah, it's hard to draw it right there. So I think you've already, touched on it once. You've touched on it almost twice, almost three times. So give or take a little bit of an area in here. Okay, this thing is pretty doggone close uh, to being a really good support level that we've bounced off a couple times. Now, do you have a lower high potentially setting up here? You do. Let's see what happens. But stochastic momentum's been heading higher. The squeeze is in a squeeze. Momentum's been heading higher. I think you're down into a range where I think Nvidia is an opportunity to buy. If you're bullish on this thing for the long term, this is a lot of consolidation in here. I'd be taking a look potentially on Nvidia, and maybe even something like a put credit spread or something down here below support. And you've got the Bollinger Band at 134, you've got the 3 ATR at 127, you've got this support level that I talked about 130. I don't know if you have to do it today, but I would consider going out about 46 days, 39 days. Let's just keep taking inauguration on the 17th. I think that sets up for a decent area. I would even look at like the 120, 115. You can take in $43 on $166 in buying power in a PM account. This is a 25% gain potentially in 39 days at the 120 level, which puts you all the way down to this support level here. You would have to break the 50, which you're bouncing off of today. You'd have to break through the Bollinger Band. You'd have to break through the 3 ATR. You'd have to break this previous support level that we've had here. You'd have to come all the way down, okay, to the trend line, or and very doggone close to the 200-day moving average. I don't think it's a bad thing to get NVIDIA at a 200-day moving average as this thing consolidates. Again, it's well off of its highs. It's in the center of its range. I think NVIDIA is giving you an opportunity uh, in here. In fact, we'll take a look at this trade as the put credit spread. Hopefully this is helpful. If it is, just give me a yay or nay. Let me know if there's something else you want me to do. I'm just trying to give you trade ideas. But here's that NVIDIA trade. Even if I went down to the 120 level, which is about a 12 delta, go about 5 wide on this thing. We can put in 5 of these. We could do more. We could do 10 potentially in this account. It's only 430 bucks on 1667. This is like a 25%, 26% return. If you take it off at 50% winner, you're going to have about a 12% return in probably 2 to 3 weeks. So I like the pullback in NVIDIA here as an opportunity to get long. I'd almost like to go. I almost like to go a little bit more. This is a 300. This is almost a $400,000 account. Okay, so even if I had a 2x loss on this thing, it'd be $1,000 on a $400,000 account. Okay, this would be a 0.25% loss. So let's go bigger. Let's go up to here. Okay. Uh, so if I took a 2x loss on this thing, which I would not do most likely, but I wouldn't even mind owning some of it in that range. But let's look to take in $1,000 using $4,000 in buying power. Again, a 2x loss is $2,000 on a $400,000 account, so it's a 0.5%. That's about the right size for me. So let's get into that too. So we're going to put another put credit spread on. I like what I see in NVIDIA. I think it gives us some opportunities. All right. I don't want to get too carried away with too many other trades. I would like on I want to see us pull back a bit more so that I can get in on VOO, which is again the S&P. I want to keep adding to my position on this. I'm up 83% on my VOO that I have now, again, which is the S&P 500. We're probably going to have to take that off and reissue. I'd like to see more pullback in here. So again, I'm just waiting for the market to pull back so that I can reload. So I want to keep my buying power relatively freed up so that buying power can use. I'm only at like 60% buying power in this account. I can go up to 80. I could go more. Uh, I'll keep taking some MicroStrategy trades off as I make some wins on those, which uses a bunch of buying power to begin with. Overall, I like where we are. I think you can take a look at some other trades. I think also looking at healthcare is interesting down here as things getting lower. I don't want to jump in yet. I think Merck is a very interesting trade down here, along with several of the pharmaceuticals. I think all of the fear about JFK, or I'm sorry, RFK, of Robert Kennedy Jr. I think all of the fears that he's going to just put everybody out of business, I think that's overblown. I think it's an opportunity on several of these to get in. We did talk about SMCI again, which is another riskier trade along with MicroStrategy. The rest of these, I don't really consider Tesla and Nvidia risky trades. I think those are good, solid, quality companies. SMCI, I think this thing is still valued at 70. I think the accounting woes seem to be behind them, at least for the most part. They got an extension to clean their books up, to keep their listing on the NASDAQ. So I think all of those are really positives for SMCI. And we're already in this trade, but we're already up 80%. So our trade's going to be closing soon. And it was down a bit consolidating, and then today it popped up decently and it's sold off. It's topping the 3 ATR and the Bollinger Band. It's not quite overbought. The weekly chart, I think this thing has a lot more upside to go, personally. I think that there's a lot of potential upside uh, in this trade. Here, I think there's a resistance level right around here, okay, which is exactly where we stopped today. So give or take, a couple, a little bit here or there, a point or so here and there. You've got a resistance level right where you are today. Okay. But this is a really strong ascending triangle. Uh, we just filled the gap, so I think it makes sense to see this thing ease off a bit. It's had a heck of a run. I'd love to see a little bit of a pullback in SMCI, but I think on SMCI, uh, we talked about doing a put credit spread on SMCI. So let's explore that one as well. So we talked about doing a put credit spread again, probably somewhere here in the January 17th uh, level. And yesterday I called out a 25.20, okay, which is pretty low, but we can still take a look at that 25.20. Okay, we have the naked puts; those are in great shape down here. The 25.20, I think, again, I put the value at SMCI up around 70. I still think this thing is very undervalued. And as long as the accounting stuff continues to check out, I think this thing gets back there. This to me is a better stock than AMD. So if you want to get into something that's tied to NVIDIA, NVIDIA's invested heavily. It's a huge customer of NVIDIA. They make better servers than Dell. They're better than AMD in this space. I like SMCI. I don't I think you be careful on what you're doing, but we could also put in potentially a put credit spread. I think this is a little too far down. Let's look at the 30-25s. Again, either one is good, but 30 would be, you know, 30 would be a decent opportunity. The 21-day moving average is around 36. Uh, 30, there's some support in there or right around the 30 range. So I don't think 30 is a bad area to be in. Maybe a little more, maybe a little aggressive, but I mean, it's a 9 delta. And you've got a 35 IV, which is not super high. So I think we could go into this trade a bit. We'd have to do a lot of contracts. Let's just stick to 20. Uh, So you can make 860 bucks on $6,600. This is a 13% return in 30 days. I think this is another opportunity if the markets keep moving higher. Okay. I don't want to get into too many of these new trades at once. We've already put on, a trade in NVIDIA. Okay, so we've already put this NVIDIA trade on. We've already put this Bitcoin trade on, and I'll clean these up myself later. So we've already, well, that's a poor man's covered call trade and NVIDIA. We actually did a SPY put credit spread today as well as our regular SPY leap today. So we did both of those here. So I've got a lot of stuff tied into this market. I don't want to get too many more speculative things in case we do decide to drop, but everything's doing really, really, really well. In here, bonds not doing as great today, but that's fine. So I don't know. SMCI still not using a ton of buying power. It's a smaller trade. Let's do it and see what happens. All right, so we'll put one more trade on SMCI there. We did talk about Palantir. It's off to the races today. Again, I'm not touching it still. I looked at trades. If we had pulled back on Palantir, Okay, I would like to get in. It rocketed up today. Now it has pulled back. I think selling naked calls on this thing, a little bit more risky trade, but this thing is so far overdone that I don't think it's a bad idea. I think we could sell on Palantir some naked calls uh, on this particular trade or do a call credit spread. Um, and I think that might be something to take a look at would be a call credit spread on Palantir, same time frame that we've been in, but maybe somewhere around like the 90, 95 level. You could even do the 95, 100 for a really good return on Palantir. Uh, so I think that's also an opportunity in here. Has this thing now? I mean, today was just absurdly stupid. They signed a contract for like 40 million, and the stock went up like $1 billion. Okay, earlier today, and then everybody realized that was the dumbest thing ever, and now it's sold back out. Okay, just because they signed a $40 million contract does not really move the needle on this stock. It's overdone. I still think the value of this thing's around 20. I think we could do a call credit spread, which would give us a little bit of positive or a little bit of negative delta too. So not a bad opportunity. Oop, SMCI got filled. We could do this 95 100. Now, can it shoot to 95 in 30 days? It probably can. So I think we'll size it small. Okay. I'll size about half of what I was doing with the rest. If I lose this thing, I'll lose $1,000 on a $400 account. Okay, which a $400,000 account, which is not the worst thing in the world. It's a quarter of a percent loss. Let's try to pick up $500, or two, $300 on this trade, and let's just put it on. Let's see how this works. Right, so there we go. So Palantir, we're going to enter a call credit spread. SMCI, we did just also enter this vertical in here. All right. Those are main trades. You guys asked about Amazon and CEG. So let me take a quick look at those two, and then we'll wrap up and finish here since we're at the top of the hour. I hope this was helpful. Let's see. Amazon. Now, Amazon, again, has just been off to the races. I love it. This is one of my favorite stocks uh, of all of them out there. It's the Death Star, as Wiz Buckley says. I love this trade, but this thing is just too bananas. It's way over the 3 ATR and the Bollinger Band. I just don't see a trade opportunity here until we get a pullback. I I don't know that I want to necessarily go the same route as Palantir, but Palantir, if we look at the weekly and a daily, you've got overbought and starting to dip back down, which means I think it's a good trade setup. And Amazon is overbought and still heading higher, so it could still head higher on us. Meta is a favorite. I like it here. I like it. Uh, uh, a little bit lower than here if we get any kind of a pullback. So I think maybe we get a little pullback so some of these things can go higher. But Google continues to move its way higher. We're in Google now. We've been in Google with naked puts. That thing is fine. We're heading up to this trend line. CEG was also, I like Reddit. I think Reddit's a great stock. It's just overdone right now. So I think Reddit's a little too far gone, like some of these things. So we'll wait till this comes back. Hims, I like this stock a lot. You're starting to get a bit of a rising wedge pattern in here. Okay. And I think if Hims breaks out to the upside, it can keep going. I think it's pretty well valued in here. So I don't think Hims is a bad play. Any kind of a pullback to me, I think would be a good opportunity to get in. And then you guys, what you called out CEG. So I know I've got it in my list anyway. Also, I do like Square. I just need a break on Square. I do like SoFi here, and I like the pullback. I think we need to get this thing back down into the 13-ish level, 12, 13 level. If we can get a pullback to this area here, I've been negative on SoFi for a long, long, long time. But uh, I'm starting to turn the corner on it. All right, CEG. I know you get. I knew I had it here. CEG, nice pullback today. I'm bullish overall on some of these energy plays. The chart here on CEG is definitely interesting with a pretty symmetrical triangle working out. So you've got a symmetrical triangle. Tighten it up a bit on this. A break one way or the other on this thing will be interesting. The momentum is down right now on this play. I also think there's some support here, okay, which is exactly where we hit today. So imagine that. I think you got to watch further this break. If we can hold in this range here, then maybe something like a put credit spread. All right, so there's a bunch of trades. Those are my favorites. That's what I'm looking at. That MicroStrategy we didn't do. Now CW messaged me here, got filled on a 250 cash secured put for $8 at 250. So uh, I'm in. I'm already in. I've got the 165s. I've got the 200s. I've got the poor man's covered call cranking. This thing's already giving me $835 just on the covered call, on one covered call alone already. Uh, Here, the 250, I don't know. It's a little higher than where I'd like to be, but have at it. So, a couple more risky trades in here: the Palantir trade, the SMCI trade. But then I really don't think Meta, Google, IWM, Nvidia. I don't think those are super risky plays. And then TMF, we're already up on the next covered calls, so we just keep playing covered calls here. TLT, all of these naked puts are out of the money still, and we've got decent amount of wins on TLT. So that's our bond part of our portfolio. VOO, I would like to get assignment on. I need to get the shares into this account. I would also like to get a trade on QQQ. I just would like some pullback on it. And then when we were looking at um, not sure. I'm sure. And then if we're looking at some of these other trades in the trading account, which is up today as well. So the trading account, let's go back to that. I'm not sure what I'm sharing here, so let's get back in. And if we take a look at the trading account, everything's in good shape. I mean, our oil, we've got these 112s. Those are fine. I talked about adding more 112s or strangles in here. I think that's not bad. ES, we just closed a naked put of this 112 or this 111 here, so that gives us another hedge. These naked puts, okay, on 112Cs, they're all cooking along 71%, 73%, 20%. There's three. Before we place another one, I'm sure one of those will likely come off. On ES, we've got the 120-day naked put. It's down $100. It's brand new. Gold, we just put this on today as a put credit spread. Silver, we're in this strangle. It's fine. It's down a couple $100 now since last week. Bonds, we're in a strangle. This thing's up 41%. I would like to get another strangle in bonds. So that'll be something we're looking at. And then the SPX, this is our butterfly. This is up 43%. It's just a kind of a spec trade that we did. Bonds, I really would like to get another strangle in bonds. Oops. Here. And I don't know if 102 days is a bit farther out, but we could probably look at something around the 108 and probably 133. Maybe that's even too far, maybe 132. So this strangle in bonds, which is skewed a tad to the upside, we're taking in 438 on $2,000. This is over 25%. Not a bad look. Maybe we even take in the upside a bit more. We're sitting at 119, so this is 11 points to the downside and about 12 points to the upside. If we moved it up a fraction here, 484, almost 500 bucks on this, on a little over 2,000, a little over 25% in on this trade. So it's not a bad trade. I think will stay in this range for a while. You know what? Let's get a new trade on. So let's get this trade on. We'll pop it in the main trading account. We'll see if we get a fill on this thing. And that'll be at least another trade in there. So we added a gold trade. We're going to add a bond strangle. We've already got a few other of these trades working. And then oil. It's really debatable what I want to do next. A strangle wouldn't be the worst thing in oil here, just to mix things up. I'd like to keep some strangles running in some of these accounts. Maybe we could do a strangle somewhere around the 52, which is pretty low. And it's just the IV just sucks. 52 and geez, maybe 90. There's some decent premium there. Taking in 730 bucks on 2,600. That's a pretty good return here. I don't like the low IV. That makes me a little nervous on the strangle. I really would like to see a strangle on there. We just need a little bit of an IV boost, potentially in oil, and we'll get going. All right, there's our trades. There's our analysis. Hope you guys got a bunch of trade ideas from this. If you need questions answered, let me know in the Discord, and we'll put some of these on and keep rocking and rolling. And hopefully this was helpful to you. We'll see you guys in the Discord. See ya. Bye-bye.